So the IRS announces a shakeup right before tax season, and this is why it should matter to you and things that you should be understanding of. That way you can be in position and know how to position yourself when it comes to you filing your taxes. Now, I gotta say this because I want to put money in your pocket before you leave. I know some people leave before the 4 minute mark, but if you stick around, you'll put more money in your pocket. But I'm gonna front load it and let you know, listen, if you haven't filed your taxes yet, make sure you do a recap of what you did in 2025, because it's a good chance that you may have $10,000 plus in tax deductions laying around in the form of receipts or bank transactions that you didn't realize could be tax deductible. The key places that I like to focus on that a lot of people don't realize is the gig economy opened up doors for you to have a ton of tax deductions. If you did anything gig related or money maker related or trying to do things to make money on the side, you qualify for tons of tax deductions. If you drove Uber or did ride sharing type things or delivery type things, miles on your vehicle, tax deductible, meals, tax deductible, and a lot of other things, travel related, phone related, tax deductible. So do your due diligence, get with your tax professional, but understand that those things that you spent money on or spent time doing or miles that you did driving can equate to tons of tax deductions that can lower your tax liability, which as a result increases your tax refund. Now, for those of you who post on social media, this is a big one. A lot of people will sleep on this. They're happy that they monetize and able to, make some money online, whether it's YouTube, TikTok, Facebook. But they fail to realize that if you had the ability to make money, now you're going to post more frequently. You're going to post more strategically. So you're now treating social media with an intent to make a profit, which is the guideline that you need to follow in order to make sure that you're doing something that's business related, which qualifies for tax deductions. So you operate in social media with the intent to make a profit now, because now you're posting to make money or increase your reach, your engagement to make more money. Now, a lot of things that you're doing become tax deductible, such as your phone bill, your internet, meals that you may, spend money on and record and incorporate into your content, travel that you may incorporate into your content and make a thesis as it relates to the setting or the background of your content. All of these things play a part and put more money back into your pocket. And I hope you really catch that, because it's not what the tax preparer can do. It's what you can look back and determine you did in 2025. And now you prove your records or go back and get your receipts or your transactions. And that's what increases your tax refund. And now when you go through this year in 2026, you're viewing your activities and the money that you spend totally differently. So that way you're not having to look back in 2026. You're doing it on a day to day. Every dollar or dime that you spend could potentially be tax deductible when done correctly. If that gave you some value in some way or sparked any questions, ask the questions below. But if it gave you some value, drop a money bag down below. Now, let's get into the article. So it says, day before 2026 tax filing season begins, the head of the IRS announced a shake-up Tuesday, saying that the personal and operational changes are intended to improve taxpayer service and modernize the agency. The timing of the announcement coincides with the critical moment for the agency as the IRS prepares to process millions of tax returns while simultaneously implementing major tax law changes under the tax and spending package President Donald Trump signed into law last summer. So they're doing it simultaneously. It's already on the verge of people filing, but now they're incorporating some tax laws, so it could be chaotic, to say the least. There are new tax relief provisions for tips and overtime and new deductions for qualifying older Americans. So for those of you who don't get taxed on tips, it's benefits to that. And taxed on overtime, it's benefits to that on the front end as well. So that's something, you should definitely be happy about. But you just got to make sure that when it comes to other money that's being made, you have to record that. Like when I talked about gig economy work or money that you made on the side or got deposited in your cash app or social media marketing money, you want to report that, because that is taxable. But just because it's taxable does not make it a bad thing. The fact that it's taxable also makes it so that you get tax deductions connected to it when it's something outside of just a W-2 job. Very important. It also goes on to say, in a letter addressed to the agency's 74,000 employees and viewed by the Associated Press, The CEO, Frank, basically announced new priorities and a reorganization of IRS executive leadership. Let's scroll down because there's a couple other things that I want to hit on. It talks about the June National Taxpayer Advocate report to Congress warned that the 2026 season could be rocky after a series of mass layoffs last year brought on by the Department of Government Efficiency, also known as DOGE. And it said with the IRS workforce reduced by 26% and significant tax laws changes on the horizon, there are risks to next year's filing season. Now, this is where it gets important. It says the IRS expects to receive roughly 164 million individual income tax returns this year, which is on par with what it received last year. But now they have a lot of changes going on simultaneously, and they want to enhance customer service and improve tax collection and safeguarding taxpayer privacy at the same time. The average refund amount last year was $3,167, according to the data. And the Treasury basically said on several occasions that the effects of the Republican tax law will result in bigger refunds in 2026. So many of you may be impacted, but also many of you may get larger refunds, especially if you incorporate what I told you about the tax deductions that you can qualify for. Well, January 26 marks the official start date of 2026 tax filing season, when the IRS will begin accepting and processing 2025 tax return. And then, of course, April 15th is the filing deadline unless you get some type of extension. So the tax season is the annual period where taxpayers prepare and submit their income tax. You already know that. But tax experts, including the IRS independent watchdog, have warned that this year's filing season could be hampered by the loss of tens of thousands of tax collection workers who left the agency through planned layoffs, buyouts, spurred by the DOGE company. Now, even though they feel that they're confident that with the new team in place, the IRS is well prepared to deliver a successful tax filing season for the American public, you got to make sure you take care of you. And that's really what I want to report to you about. So even though they have changes and a lot of things that may seem chaotic, at the end of the day, when it comes to filing your taxes, you got to understand that you can't expect your tax preparer, tax professional to perform some type of miracle. You are the miracle. You are the entity who's responsible for positioning yourself to legally pay less in taxes. What do I mean? That means that you can't expect them to perform their magic and say, hey, I want to get back this amount. Now they have to do something and pull a rabbit out of their hat or, finagle some things in order to try to get you this refund. Otherwise, you're not happy or you're shopping around trying to see who else can do it for the lowest cost, as many people do, when in all actuality, it's based on what you did last year. And any other tax preparer who tells you different is lying to you. And you might want to fire them, because otherwise they're going to put you in a predicament to where you can be audited and not have any protection or results or receipts to reflect why it is that you claim what you claim. However, if you know you did certain things that was in pursuit of making extra money on the side or pursuit of a profit or building a business, then okay, I did all of these things, and all of these things contributed to or played a part in or were ordinary and necessary for me to operate my business. I didn't know that because I spent money in this area, did this, or incorporated this into my content, used this as props, went on this vacation, created a ton of content. I didn't know that it really wasn't a vacation. It was a business trip, because this all played a part in the content I created. This meal really wasn't just a meal. It was something that I used for marketing, and it played a part because that's the type of content I created. That's what I use to leverage the type of content that I create, because it taps into or speaks to my audience. I didn't know that. And now that you do, you can go back and tally up those things that you did that could position you to have a ton of tax deductions. And as a result, it lowers your tax liability and increases your tax refund. And for those of you who feel like, I make too much money, I always pay, I promise you, if you incorporate tax deductions, having a home-based business, not only can you lower your tax liability, sometimes you can drop into a lower tax bracket, and that lower tax bracket qualifies you for credits and actually positioning you to end up not owing and sometimes even getting a refund. Mr. Smith signing out. Salute.